Hello traders, welcome back to another video. In today's video, I will be teaching about multi-time frame analysis. It is a very useful knowledge where you can apply when you are trading either the Forex market or other markets like stocks market, crypto market, commodities and etc. Although there are some traders that think multi-time frame is useless and a waste of time, I'll be showing you why there is a need to do multi-time frame analysis. Before we start, please like, share and subscribe so that you wouldn't miss out on the upcoming videos. Before I start, let me first introduce this website that I always use. This website is fastbull.com. It's a very good website where you can keep yourself updated with the latest news on the economy or what is happening with the world right now. So this is all the news articles. Then you can head to the economic calendar as well. This is where you can see the news releases of the day, and it is very helpful because it can help you to avoid all the pairs that could have a very unexpected moves that can hit your stop loss as well. Also, you can check if there's any holiday going on with the market today. And we also have the codes as well, the latest price and some data with institutional data, policy rates. Then we have analysis as well. This analysis is where all the professional traders come together and share their analysis on the pairs, Forex pairs, commodities and sometimes crypto as well. And we have the pro version, and also we have business. So this is very highly recommended by me and it is free of charge. Before we dive in how to apply multi-time frame analysis, we must first understand what is multi-time frame analysis. Multi-time frame analysis is basically analyzing a single pair at a different time frame. So for example, we have Euro USD over here and we have the time frame over here. So it means that you are analyzing Euro USD using different time frames. For example, after you have analyzed it on the daily, you jump down to the 4 hours, and after you are done in the 4 hours, you jump down in the 1 hour to place your entry. So this is an example of multi-time frame analysis. Now let me go through the importance of multi-time frame and what can happen if you don't do your multi-time frame. So let me draw some examples. I'm going to draw a daily support. So this is a support level that you have identified in the daily time frame. Daily support. Now let's say this is an uptrend and price have came back to this support level. It broke out, create a support over here, pushed up, and price came back down to revisit this support area once again. So now let's say if we are in the 1 hour time frame. Now if we have this move right here, this move, and if I zoom out to the 1 hour, we are going to see something like this. We are going to see a downtrend. Remember that the daily time frame is an uptrend, and what happened is that most traders that does a single time frame analysis, they'll proceed to draw a trend zone like this because it's a downtrend in the 1 hour. Now this is for those that doesn't do multi-time frame analysis, and if price comes back up to revisit, what they'll do is that they will start to take sells at this resistance. But what they did not know is price is actually at a key support in the daily. And what could happen? Price could reject up to the upside on the daily, and what happens in the 1 hour? It will clearly hit your stop loss. This is why most traders, they lose money and they don't know why. It is because they don't do their multi-time frame. I hope everyone can understand this, but if you don't understand, feel free to comment down in the comment section below and I will actually answer your questions. So let me go through this once again, just one more time. So we have the daily time frame. Imagine this is the daily and we have an uptrend. So price is moving up, came down. This becomes a support because it rejected to the upside. So this is a support level. Price came down once again and revisit this support area. And if we zoom out this downtrend over here, short-term downtrend in the 1 hour, we're going to see a downtrend. And for those beginner traders, what they'll do is that they only analyze in one time frame. If that particular time frame tells them it's a downtrend, they'll proceed to take sells. So price came out and revisit this resistance once again, they'll start to take sells. But what they did not know is that they are actually at a key support level in the daily time frame. And what happened? Price rejects in the daily support, and in the 1 hour, of course, it broke out of this short-term downtrend zone. So this is the importance of multi-time frame and how it can help you avoid those losses that can catch you out where you did not know that you are actually trading off at a daily support, but you are selling, and you're trading off at a daily resistance, but you're buying. I hope everyone can understand. Of course, we'll look at some real chart examples and you can get a clearer picture on what I'm talking about. Now we are at a daily time frame of the Euro USD, and we can clearly see that on the daily time frame it's an uptrend. And I can see this support level that is coming up here. This is a very good support level because it has been proven 3 times. 1 time, 2 times, and 3 times. So it is highly reliable at this situation. So let me ask you, what would you do at this situation? Of course, you will look for buys in the daily time frame, yes? Because it's an uptrend and price is at a key support level. So it is logical to take some buys at this area. But now, what happens to many traders that only trades the 1 hour time frame or only trade using one time frame? So let's jump down and have a look. Let me proceed to delete this. Now let's jump down to the 1 hour. 1 hour, can you see that we are having a downtrend in the 1 hour? Can you see this? We're having a downtrend in the 1 hour. We're having a downtrend in the 1 hour, and what happens is that many traders, they will look for sells at this area because in the 1 hour it's a downtrend and this is a strong resistance level. So if price comes up to this resistance level, they will look for sells. But what happened is that you do not know that actually in the daily time frame you are at a key support level and price could actually reverse and head to a higher high. Can everyone see this? Can you see what the reason? Can you see the reason why price rejected from this area? If you trade using only one time frame, you will have no idea at all why did price reverse at this area. But if you are multi-time frame trader, you would know that this reversal happened because it was at a daily key support. So that is why I will not look for sells in this area. What I would do is that I'll wait for price to break out, then I will look for buys to the upside following the uptrend in the daily time frame. Now I hope you understand the first reason why it is important to use the multi-time frame. The second reason is risk to reward. Let's say we have a support here and you are taking a buy here. If you are taking a buy once the candle closes here, it's just an example. This is not how you should enter, but this is an example that I want to show you how different time frames can offer a better risk to reward. So let's say if you take a buy here, you place your stop loss right below this low and you have this target. In the daily time frame, we are having a 3.57 risk to reward. But what if I tried to enter in the 1 hour time frame? Let's have a look. So in the 1 hour time frame, for example, if I take the buy once the candle engulfs every bearish move here, if I take the buy here, I'll place my stop loss here. Let's have the same high target. Can you see this? Can you see the difference in risk to reward? we have 3.57 risk to reward if you take the entry in the daily time frame, but if you search for entry in the lower time frame, you get a 5 reward. So for those that don't know what is risk to reward, I will prepare a video on risk to reward where I will explain in detail how risk to reward can definitely increase your profitability. But in simple terms, risk to reward simply means how much you are risking to gain something. So in this case, 3.57 means, let's say you are risking $100, you're risking $100 to make $357. But what about this? You're risking 100 to make 500. So that is when we say that we have a better risk to reward. I hope my explanation was clear enough, and what I explained today was basically the importance of multi-time frame. The first thing is how we can avoid buying at a higher time frame resistance. Second, how we can avoid selling at a higher time frame support. Remember this, it is always good to use the higher time frames to identify the trends or the outlook, or to use it to identify the key support and resistance level, and you use the smaller time frames to identify the entries, because it would give you a sharper risk to reward. So I really hope that you understand the importance and would start applying to your daily trading. Here comes to an end of this video. If you are interested to join my live streams and watch me live trade, feel free to head to trading.live where you can watch my live streams every day. If you have not pressed the like button or share and subscribe, please do so. Thank you for watching and see you in the next video. Goodbye.